This is Asia Trade. I'm Shery in Tokyo. The top stories this hour. Asian stocks set to extend Wall Street gains as hopes hold for U.S.-Iran deal. Treasury yields easing as traders pare back bets on Fed rate hikes. Chip makers in focus with Micron's market cap topping $1 trillion while Qualcomm strikes a deal with TikTok owner ByteDance. And with Japanese banks expecting another record year of profit growth, we get the outlook for trading and deal making with Mizuho CEO Masahiro Kihara.
And I'm Haidi Stroud-Watts in Sydney. Let's take a look at the setup for trading across Asia. We are looking at Asian stocks broadly looking for a fourth straight session of gains there. We're looking a little bit muted when it comes to Chicago Nikkei futures, but setting to sort of inch up higher in the Wednesday session. Traders are really clinging on to these expectations that the US and Iran will sign a peace deal, even as we also contend with military strikes in the Persian Gulf. We're seeing those equity futures when it comes to Seoul Kospi futures up by 4.5%. This as we had the chip story really progressing in the overnight session. The S&P 500 also hitting that record high as well, with stocks joining bonds higher on account of this geopolitical optimism. Dollar yen, this is an interesting story. 159 is where we're trading at the moment, but we've really had that huge fade in volatility in trading in dollar yen, just about collapsing on Tuesday to multi-year lows after we had the recent intervention from Japanese officials setting that 160 handle as a likely ceiling. So watching that, but that sort of drama of that story has certainly begun to fade. Let's take a look at oil, because we had sort of recent moves in the overnight session, but at the moment it is really steady as she goes, with New York traded crude down by about 0.3% there after the pop in the previous session for Brent. That US touted progress towards a peace deal, still keeping a cap on a major amount of volatility when it comes to oil prices. We are also watching aluminium up 0.6% in the London session. That is the highest in more than 4 years. There are ongoing fears of output cuts from the top producer of the Chinese market, compounded by, of course, still a lot of uncertainty when it comes to Middle East geopolitics. Well, the US is talking about progress towards a peace deal with Iran, despite fresh hostilities and uncertainty of the Strait of Hormuz. Security in the strategic waterway remains unclear after the two sides exchanged strikes, and the US Central Command pushed back on reports that suggested the military was helping escort vessels. For more, let's bring our senior editor, Derek Wallbank. Derek, the last time we spoke about, where we're at with these negotiations, you said we're at sort of where we were, right? How much progress has been made as markets onlookers really kind of cling to hope that this will get done?
Yeah, Heidi, I think what we're looking for here is a lot of vibes. I think that's what we have to hang on to. We're searching for tangible, but we're hanging on vibes, and that's kind of where you're seeing the market right now. You're certainly seeing a lot of conversation about a positive move towards a deal in that direction, albeit with the biggest sticking points remaining sticking points. And so that's kind of where we've sat for a little while. We're certainly there now, but you're seeing these market indications as though we're getting closer and closer. And one of the ways that you would assess that you're getting closer to this is, again, the U.S. and Iran both taking steps to not re-escalate. The strikes that were mentioned, sort of going back and forth both sides. Yes, there were commentaries about that was a violation of the ceasefire, but overall it is really still holding. There's a lot of attention being paid to whether or not the ships are going to get through the Strait of Hormuz, and if that can be opened up, and what that's going to look like as that kind of goes to hopefully a point of stabilization, as well as what the overall architecture of this looks like going forward. And that's one of the key sticking points here, Heidi, is the idea of whether or not the Strait of Hormuz becomes something that Iran has effective control over, or if it can go back to its pre-hostilities time as something that was really more of a fully international waterway. The idea of being able to have Iran come out of this conflict in a way that they basically have veto and tolling power over the Strait of Hormuz, however you kind of label it, is one that the Trump administration finds objectionable, and its critics would be eager to categorize as a loss.
Yeah, certainly that sort of context of what's actually been gained, or as you say, what's potentially been lost throughout the course of this war. But Derek, one of the sticking points for Iran is this $24 billion in frozen assets, right? They want half of it released when this deal is signed. Do we know what the president feels about this? And I suppose even more importantly, how the foreign policy hawks in his administration would feel about this?
Well, yeah, I think it's a little easier to get at the idea of what the hawks think, because remember, every single thing that's talked about in this trade deal, this overall deal, which I guess is also a trade deal, is the idea of what happens with the money here. And please note that the money is really critical, because one of the biggest things that Donald Trump was complaining about when he was talking about the Obama-era Iran deal was the idea that the U.S. had given Iran money. It became a big Republican talking point that the U.S. was essentially, through this mechanism, funding Iran in some way. The Trump administration is very, very sensitive to these points. You are seeing some Trump allies, Lindsey Graham is one of them on the hawkish side, really coming out and saying that this is a very bad idea to sign something like what they are hearing the Trump administration may be looking to actually sign. And so that's going to be one of the key questions. You know, if you're sort of, to use a sporting analogy, if you're sort of on the 2-yard line and you need to sort of get over the goal line, there's still a lot of distance there. And what is left in these negotiations is the hardest stuff. You know, the hardest stuff isn't done early and then you just sort of clean up the pieces. The hardest stuff is also last. Now, I'll tell you the other thing is that the Trump administration is also tremendously sensitive to the idea of economic pressures that are going on. You know, I was looking at the reports of gas prices in the United States, you know, retail gasoline prices. And Patrick DeHaan over at Gas Buddy was saying that 12 states in the U.S. set their all-time records for the highest Memorial Day gas prices ever seen. 7 of those states voted for Donald Trump in the last election. And overall, Americans are spending somewhere around $500 million more per day on gasoline than they were before this conflict. Now, that's an awful lot of money to be going on with, and all of this is having the economic effects that it's having throughout the U.S. economy. So that's something else that the Trump administration is very sensitive to. So I guess I would say there's a lot of things going on in these talks. There's a lot of things going on surrounding the talks that complicate this whole effort as well.
Senior editor Derek Wallbank there with the latest on the Iran-U.S. negotiations. As Derek mentioned, there are still so many challenges left. But when it comes to the markets, we are seeing now macro risks like the ongoing war getting priced out. Bloomberg Markets reporter Anthony Stevens joins us now from Hong Kong. Anthony, seems that investors are just looking past the renewed fighting overnight.
Yeah, look, there's a lot of moving parts of the Iran situation, but their incremental impact on global markets is starting to fade very hard. Yesterday, we saw a 20 vol move in oil vol to the downside. So oil vol is now less than the Kospi vol. So people are much, much less concerned about oil, at least on the Brent contract, than they used to be. Treasury volatility also fell very hard. The MOVE index was down 4%, and equity volatility is now plumbing even lower. You saw VIX futures drop another 3% to year lows. So however you look at it, cross-asset volatility has started to get really compressed here. And as a corollary, dispersion in equities can really come to the fore here. So equity markets are really trading on fundamentals, on incremental news flow around technology, and less on macro.
Yeah, when you talk about fundamentals, though, I have to be a little bit skeptic and think, oh my gosh, is the tech rally, the incredible exuberance around it, really sustained by the fundamentals? I mean, that rally continues.
Yeah, what's really interesting is the street's perception of fundamentals has finally caught up to retail's perception of fundamentals, right? The UBS report on Micron was really quite mind-blowing. They expect the stock to kind of double from here, and so the stock's reaction in the light of that report can be looked at as muted, right? And it's really a case of looking at what the expectations for capex look like in the 2 to 3 to 5 year time frame, and those expectations are getting ramped up ahead of these mega IPOs coming in the US. There's a lot of positive guidance from hyperscalers. Their confidence remains untroubled by the macro environment. And in fairness, credit spreads for those hyperscalers are very tight. So it is justified by the kind of funding conditions they're seeing. And that is feeding into CapEx assumptions, which is in turn feeding into analyst estimates of future growth for some of these semiconductor names. Now, Micron being up 19% has a great lead into the Korean markets this morning.
Yeah, exactly. Feeding into another potential boom day for Asian equity markets like the Kospi, as you mentioned.
Like, what a spectacular day for them to be launching leveraged ETFs on Samsung and Hynix, right? That's a bit of good fortune for Korea retail that, to be fair, they kind of deserve, given that they've been buyers on every dip all the way up. In Taiwan, we're seeing another day of about 1% gains. China remains a bit of an outlier, but this Qualcomm deal with ByteDance promises a new round of reassessment of China's AI aspirations, right? Maybe ASICs are the way forward for these China hyperscalers. They can buy custom-made chips for their AI without running afoul of US restrictions. So there's a lot of moving parts in Asia tech today. Broadly speaking, as the macro risk abates, tech can rally, and Asia is set up to trade quite well today.
My Bloomberg Markets reporter Anthony Stevens, really good to get your views. And coming up, Mizuho CEO Masahiro Kihara joining us to talk about the bank's outlook and strategy. We'll be live at the UBS Asian Investment Conference in Hong Kong as well, speaking exclusively with their Asia Pacific president, Iqbal Khan, and the CEO of Chinese chipmaker VeriSilicon. Much more ahead. This is Bloomberg. U.S. crude prices pretty steady in early Asian trading, and there's a little bit of downside pressure. This despite ongoing uncertainty over the Strait of Hormuz. Of course, we had seen renewed military strikes by the U.S. and Iran earlier, sending Brent back towards that $100 a barrel level. Bloomberg Steven Sapchinsky leads our Asia energy coverage and joins me here in the Tokyo studio. I mean, it's really all to do with the latest headlines.
Yeah, I mean, I think the market, you're seeing a little bit of an increase yesterday because of that renewed tension in the Strait. That being said, prices are still down from Friday. I think the market, you're looking at oil a little bit today. It's still kind of down. You're not seeing much more of an increase. I think there is an expectation when you hear what the officials from the White House have been saying, what Rubio has been saying, and the reports around the discussions between the U.S. and Iran, that there could be some sort of extension of the ceasefire, or at least things aren't getting worse. And I think that's the big thing that the market is focusing on. As long as things don't get worse and these talks continue, there's no risk of this further spiraling into a regional conflict that could, result in counterattacks on facilities that produce oil and gas for the region. And when we're still in those discussion phases, the risk of further conflict does seem to ease.
The fact that two supertankers exited the Gulf, does that make any difference when there's no resolution to the conflict?
I think it's really symbolic. I wouldn't say, two supertankers doesn't change the calculus of supply. But the fact of the matter is there has been more supply getting through. And, Iran themselves said that there was one day there were 33 vessels that went through. That would have been the highest, if confirmed, since the war began, basically. But still, we're not at the 135 that we had at pre-war levels. We were shipping 135 vessels through there. We're not close to that level. But the fact that some ships are getting through, not just oil tankers, there have been, in the last 48 to 72 hours, there have been 3 liquefied natural gas tankers connected to Qatar and the UAE that have gone through. And that as well indicates that there is some sort of easing, at least symbolically, that some fuel will be able to get to their customers.
What's happening with aluminum? It's skyrocketing. Is this also the supply disruptions issue?
Everything has to do with Hormuz. It all goes back to, but there's been a bit of gasoline on the fire with aluminum because of what the Chinese government is doing. So essentially, the Middle East, also a major exporter and producer of aluminum. When Hormuz closed, that tightened supply. To make up for that and to take advantage of the price increase, Chinese smelters actually went in and started producing more. And now the government is kind of cracking down on it. The government says you're overproducing, you're producing above where you're allowed to. And because of that, China's going to have to rein it in. If China's reining it in, that was one bit of extra supply that was helping to the market. I mean, aluminum prices were already surging. when you remove that extra bit from China, that just adds a tighter situation, and that's what you've seen kind of exacerbate the current situation.
Bloomberg Stephen Stepczynski, who leads our Asia energy coverage there in Tokyo. Well, the Reserve Bank of New Zealand is widely expected to keep rates unchanged today, even as inflation remains above its 2% target and the Middle East energy shock weighs on the economy. Our Bloomberg economist James McIntyre joins us for a preview. So, James, what's been the size of the impact of the energy crisis for New Zealand in particular?
Yes, so we've already seen the energy prices flow through directly to diesel and petrol prices, resulting in the price data that we've gotten for April showing a big spike. So we've got a chart in our preview highlighting that this is really going to result in the RBNZ having to dramatically revise up its inflation forecast when it releases those new numbers today.
So we could see a surprise?
Well, what we're likely to see is the RBNZ sticking for a wait-and-see hold. They've laid out a playbook. Governor Bremen gave a speech pretty early on in March saying that the way they're going to play this crisis, this supply shock, is they're going to sit there, they're going to wait and see look through the initial shock to energy prices and see what it does to longer-term inflation expectations. So wage-setting behaviour, businesses raising or passing those through to costs. So that's what we're likely to see, that wait-and-see hold move right now. The initial info that we've got in terms of releases from professional forecasters and households and business is that those expectations at the longer term so far remain anchored. So it's okay for now.
How challenging are broader economic conditions?
Well, we had a big take on this that was released yesterday around New Zealand's housing market. The economy has been bubbling around in or out and in and out of recession for couple of years now. GDP per capita, living standards going backwards, the labour market, a lot of slack there, high unemployment rate, and we can see the consequences of that in net overseas migration. Kiwis can move to Australia whenever they want. The strong labour market and reasonably stronger economy over here has seen them moving in droves. And so that housing market, that weak point in the economy, isn't going to be helped by any further rate hikes. In fact, the pickup in bond yields from inflation concerns around the world and the hawkish that we saw in April from the RBNZ actually resulted in a tightening of financial conditions. So there's not the RBNZ has a very tight, fine line to thread here when it comes to sounding hawkish on inflation and keeping those expectations intact, but not overly tightening financial conditions by convincing bond markets that a rate hike is coming pronto.
What fiscal options are there? It is an election year too. Do you expect there's some policy levers that...
Well, we've got the New Zealand budget coming up in the next week or so. It's likely that we'll see some response there. What we have seen, though, is fiscal policy has been a bit of a dead weight and an anchor on the economy. There has been quite a tightening there and an austerity feel from the government. That's what they wanted when they came in, and their goal was to fight inflation then. It's a different inflation shock now. There has been a small contribution to lower-end households in terms of helping them buffer these petrol price and direct costs from the Strait of Hormuz hit. But whether we see any more of that I think it's likely to not be entirely fulsome. There's still going to be a focus on trying to get that budget repair and articulating a return to surplus at some point. And that's probably going to keep that support from the fiscal policy being quite tempered.
Bloomberg Economics, James McIntyre with that preview for the RBNZ, but also some of the broader challenges for the Kiwi economy. We do have more ahead on the Asia trade. This is Bloomberg.
Bloomberg has learned that Qualcomm has reached a deal with TikTok owner ByteDance to supply chips for AI data centers. Sources say the chips will support the media company's AI agent software. Let's get more on this Bloomberg scoop with our tech executive editor, Tom Giles. Tom, how significant is this deal?
For Qualcomm, this is a company that is trying to challenge NVIDIA in the market for advanced artificial intelligence chips. Lots of companies are. but not every company is winning deals with the likes of ByteDance, obviously a major global social media AI company that's known to all of us, particularly those of us here in the U.S. After it recently had to divest its stake in TikTok. But the most important thing here is for Qualcomm, which is trying to mount a challenge, was trying to break into specialized AI chips. This is a major win. It's a major validation of their efforts to start to chip away at NVIDIA's significant lead in this major market.
Tom, are there any concerns about this running afoul of the U.S. restrictions on production of AI chips for Chinese firms at all?
Sure. So yes, the U.S. has placed very strict limitations on what U.S. companies can and can't do, specifically with regard to selling advanced chips. This should not run afoul of those laws and those rules and those executive orders, so long as the chips don't meet the specific criteria. You'll recall that the U.S. has allowed NVIDIA to sell certain types of AI chips to China, but not others. So there are exceptions. There is a willingness on the part of the U.S. to say, okay, these chips are allowable, these chips are not. One question we might ask is just how willing China is to have ByteDance make these purchases. But you have to think that ByteDance wouldn't have made this agreement with Qualcomm without some sense that it's not going to run afoul of the orders.
Qualcomm has big business with China. It's biggest market, it seems, when it comes to the smartphone sector. And then they expect that to bottom out as well. Could this be a longer trend of upside for this company?
Yeah, I mean, Qualcomm needs to diversify, like so many other companies. If you think that that growth will slow in the market for mobile phone chips, where it has been a world leader, you have to think they have to get into these other markets. And Cristiano Amon has been talking about, winning customers. They, in their most recent earnings, you'll recall, they talked about starting to sign them up, but he didn't identify any. So that's where we were able to ascertain who one of these first major customers is. And we will certainly, the expectation is, according to my colleagues who talk to people close to the situation, is that this is certainly not going to be the last. We're on the lookout and we'll be keeping an ear to the ground for any additional customer wins for Qualcomm.
Bloomberg Tech Executive Editor Tom Giles there. Let's get you caught up with the day's other headlines. And Xiaomi's first quarter profit fell more than expected as a sharp rise in memory costs weighed on its smartphone business. Net income tumbled 57%, while revenue fell for the first time in nearly 3 years, down 11%. Xiaomi's president says the company plans to improve its product lineup and raise average selling prices to offset weaker volumes. Volvo has confirmed to Bloomberg Scoop that it's reached a deal with the Trump administration to avoid a U.S. ban on vehicles tied to China. Volvo is majority owned by Zhejiang Geely Group. The agreement overcomes a barrier that has effectively blocked the U.S. market from Chinese cars over national and economic security concerns. Ferrari shares tumbled as industry analysts and social media users alike blasted its first fully electric vehicle. The $640,000 Luce was shaped by the former Apple designer Johnny Ive. Critics are comparing its appearance to mid-market offerings from the likes of Tesla and Honda. Ferrari will be hoping that the car's performance will silence the haters, with 1,000 horsepower taking the Luce from 0 to 100 kilometers an hour in under 3 seconds. More ahead on the Asia trade. This is Bloomberg.
It could be another big day for Asian tech, Haidi, given that we're seeing that leading coming from Wall Street. We had Micron seeing its best days since, 2011, its market cap topping $1 trillion. UBS now saying that the market cap could actually more than double over the next 12 months. Hyperscalers are really willing to trade pricing for memory supply at this point. It's all about that AI infrastructure build out, memory shortages, AI demand, really looking past what we saw in terms of of the Iran war, the conflict, and renewed fighting?
Shery, you ask and I ask, we ask collectively every day whether this momentum for tech, for the AI-driven rally is going to fade anytime soon, right? And it seems like ever since we got the NVIDIA numbers, we've seen sort of fresh catalysts driving the momentum even further. And we're starting to see some of these other markets in Asia outside of just Korea and Taiwan start to play catch up as well. Having said that, those markets will remain, of course, front and center. But take a look at what we're watching when it comes to these broader markets. We had the S&P 500 overnight hitting at fresh record high. That's going to carry through some of that optimism to this part of the world as well. This is a picture as we look at crude. Of course, we haven't seen a big magnitude of moves when it comes to crude pricing. It's been a little bit back and forth as that sort of holding pattern, waiting for more of a substantive outcome in these US-Iran negotiations, even as we're also contending with further military strikes in the Persian Gulf as well. So there's a lot of big issues that we still don't know of whether we're going to see any resolution on, including that $24 billion of frozen assets for Iran. They want half of those to be unfrozen if the deal is signed. We know that some of the foreign policy hawks within the administration will have very strong views on that, but that's sort of the situation that we're dealing with at the moment. You mentioned that carry through when it comes to Asian stocks. The Nikkei 225 looking like we'll see some optimism at the open. That volatility when it comes to the yen has well and truly fallen as well. And we've also had that volatility and that upside pressure when it comes to bond yields and our treasury yields as well coming off as well, Shery.
And Haidi, over in the U.S., election season ramping up. Texans voting in a runoff primary election to decide which Republican will join November's race for the U.S. Senate. President Trump has endorsed State Attorney General Ken Paxton over incumbent Senator John Cornyn. Let's go to Dallas and bring in our Texas Bureau Chief, Julie Fine. Julie, for our viewers across Asia, set the scene of why this race in particular matters.
Well, this race is very important for several reasons, but most importantly, Republicans are hoping to hold on to this Senate. Democrats believe they do have a chance to win this race, and they believe they have a better chance if they run against Ken Paxton, the Attorney General of this state. So a lot of eyes are on this race because they really do believe it will affect the balance of power in the Senate.
Julie, are we seeing a geopolitics, a Middle East conflict, or at least a feed-through when it comes to the cost of living and energy prices as we head into summer driving season? Are these issues that are finally sort of hitting the political sphere, particularly ahead of these midterms?
Affordability is definitely an issue that has been very important in this election season. Oil prices and gas prices, of course, a big deal here, especially in the state of Texas. The Iran war has definitely played a role with some voters. We're going to find out tonight or tomorrow morning which one really stuck out the most when you start to hear from these voters and see who is the candidate of choice.
Who do Democrats want to actually come out victorious from this election? Who do they think they have an edge against?
Well, there is a thought that Democrats have an edge against Ken Paxton. Ken Paxton has had a series of problems in the state of Texas, some legal, some personal. They think that may play into the Democrats' hands better. They may have a better chance against him. Senator John Cornyn has been very popular with Republicans in the Senate, a 4-term senator. This would be a new face for them to run against in this general election if it's Ken Paxton. But again, Ken Paxton is ahead in the polls. He was ahead even before the Donald Trump endorsement.
Bloomberg Texas Bureau Chief Julie Fine there. Well, Bloomberg opinion columnist and former New York Fed President Bill Dudley says the U.S. central bank is risking losing credibility over a prolonged failure to bring inflation back to that 2% target. Dudley told us that there's growing risk that inflation expectations are becoming unanchored, pointing to rising long-term and 2-year outlook measures.
I think the problem here is that we've been above the Fed's inflation target for more than 5 years. And there is a risk that inflation expectations do finally become unanchored. And the University of Michigan preliminary result last week showed that 5 to 10 year inflation expectations did tick up quite markedly. Chris Waller's focused on the 2-year inflation outlook, 2 years forward. That's also moved up. So I think the Fed is concerned that they're starting to lose credibility because they haven't been able to get inflation back down to 2%.
How much is this Fed sort of conditioned by the pre-pandemic reality of low rates in a way that has made them overly dovish to meet the moment? And frankly, having to reconcile their overly dovish stance with fundamentally stickier inflation as a reality?
I agree with that. I mean, I think that if you look at the level of real rates prior to 2007, the real rate embodied in the Taylor rule, for example, is 2%. The Fed's assuming today that the level of real rates adjusted for 2% inflation is 1%. So it's very possible that monetary policy today is not restrictive at all because real rates are higher. And there's a reason to think that real rates are higher. Look at the investment spending boom caused by the AI. That's raising real interest rates because it's increasing the investment demand in the economy. The fiscal path of the U.S. is also raising real rates because it's diminishing the supply of savings available for investment. So I think there are good reasons to think that real rates are higher than they have been in the recent past.
When you have Christopher Waller saying that his current policy position is to hold rates steady for the near term because policy risks have changed, do you find it interesting that he was able to look through the potential tariff impact on inflation, but he's not when it comes to the oil shock?
Well, I think they're really the same in terms of both being likely to be transitory. The real question, though, is how does it get bodied in inflation expectations? And I just think the Fed is sort of pushing the limits of their credibility to claim that, trust us, that we're going to get inflation back down to 2% when we haven't been able to do it for the last 5 years. So I think he's getting nervous that they can't sustain this. There's also a big risk here. I mean, Kevin Warsh is coming in. The president wants lower interest rates. So you can see all the elements in place where the Fed should, tighten rates sometime later this year, and they don't because of the pressure from the president. So the questions about the Fed's independence, how willing Kevin Warsh would be willing to buck the desires of the president, also weigh into this situation. So I think that if the Fed's independence wasn't under question, then it'd be more likely that inflation expectations would stay well anchored.
The former New York Fed President Bill Dudley there speaking to Bloomberg's Lisa Abramovitz and Anne-Marie Hordern. Well, still ahead, Japanese banks predicting another record year of profit growth despite Middle East concerns. Mizuho CEO Masahiro Kihara joins us next to talk about the bank's latest earnings print and business strategy. This is Bloomberg.
We're about 20 minutes away from the market opens across Japan. Take a look at how assets are setting up because we had a day of pressure when it comes to the Nikkei, but we're seeing a little bit upside on futures. Of course, the Japanese yen still pretty much on what has been seen as intervention territory, although yen-dollar volatility has been low to the lowest since around 2021 or so. Could we see some gradual strengthening? Do keep an eye on JGBs as well because we do have a 40-year bond auction. And you can see the Japanese banks have been outperforming the broader topics. This is interesting because, of course, we do have rising Japanese rates boosting loan profitability. In fact, Japan's third largest financial group, Mizuho Financial Group, forecasting now record earnings, but all three mega banks here in Japan now thinking that the Iran war could threaten credit quality or broader economic growth. Let's discuss all of this. Joining me now is Masahiro Kihara, President and CEO of Mizuho Financial Group. Always good to see you, especially here in our Tokyo studio with the nice backdrop.
Yeah, thank you very much for having me.
Let's talk a little bit about your business and also the Iran war impact, because you in fact have set a higher dividend per share. You have 100 billion yen buyback. Is it a sign of confidence of the fact that you can weather through the fallout from Iran?
So I think we have made a good progress in our business, and we concentrate in 4 areas. And for fiscal year 25, our after-tax profit was 1.25 trillion yen. Although we had a little bit of one-timers, I think from basic earnings, I think it's 1.15 trillion. Because we had a good development, and also there's a bunch of global collaboration happening around the regions. I think 1.3 trillion is a good number for us to try to reach. Having said that, I'm a little bit, there's a little bit of uncertainty from the Middle East situation, I think. And that will have a little bit of impact, maybe.
What is the channel through which you're seeing that uncertainty being transmitted at this point?
Yeah, so Japan, the government, the refineries, the chemical companies, all of them were making a lot of efforts to secure supply. However, the price is skyrocketing, right? Number one. Number second, for certain products, there seems to be shortage because of supply chain disruption. And then Japan imports a lot of chemical products from the globe, actually. And there might be a little bit of shortage on that. So I think we were sort of projecting somewhere around 1.2%, 1.3% growth for this year. I think that will be a little bit affected. A little bit below 1% maybe, but still growing.
How many of your clients are being hurt by this?
So we've been talking with our clients, many of our clients, especially the refineries, chemical companies, all of them are scrambling around to get the supply. And I think at this moment they are successful. But this
has been going on for a while. We're getting into June.
Of course. But the issue is more about maybe the price actually right now. And definitely that will probably, the corporate earnings will be affected probably.
Which in turn could affect you.
Well, it might, it might, at the end of the day, it might stall corporate action. But what we see right now is that the momentum that we have before the war is actually continuing from a corporate action perspective. Many of our clients are pursuing M&As, maybe invest for the futures. So I think that part is still not hurt at this moment yet.
When could it hurt?
If the war extends for long, it might. I don't know. I don't have the answer for that. But we believe that we expect that it will end somewhere around August. It might be our hope. And then we think that it will get normal within 6 months or so. Yeah.
Market exuberance. Then does it make sense at this point? You record highs.
You mean?
Yeah, the Japanese stock market, are they pricing in the potential fallout from the Iran war properly?
That's a big question. I think a little bit overpriced, a little bit. But given the fact that the corporate action is still there, which means that many of our clients, corporates, are trying to, expand their returns, improve their returns, improve their PBRs, etc., and many of them were successful. Based on that, momentum and also AI, yeah.
Then why isn't the Bank of Japan hiking? Should they do it this June?
I would say June, July, there should be a possibility. There's inflation, definitely. The last CPI number, right? The core, which means excluding fresh food and energy, that was 2.3% year on year. So I think there is a possibility that BOJ will.
Are they behind the curve already?
Tricky question. A little bit.
Which is why we like asking it.
Yeah, I know.
A little bit.
A little bit, I think. Yeah. But I think the BOJ is talking with the government. Yeah.
Lots of market reaction if they don't move.
No. I don't think there will be a big market, reaction, even if they don't move or even if they move, I think. The thing is, if they move boldly, like it's not 0.25%, it's 0.5%, that would be better for the market, maybe. For the bond market, maybe, right?
Especially given that we're seeing a lot of skepticism in the bond markets, given the new extra budget. No new bond issuance, though.
That's what I'm hearing. Yeah.
So investors feel a little bit safer. Is this the right way to go for the government?
I think it is. The government said that they will use fiscal policy in a diligent manner. If they are not issuing new bonds, that means diligency, right? So I think they are going the right way. Yeah.
You're also working with the government on Anthropic's Mythos?
Yeah.
You're going to get access at the end of the month, is that correct?
That was what I hear, but still, it's not coming yet. Yeah, so that's what I heard, but it's not still coming.
So what are you expected to do once you get access?
Well, I would say that we will screen all of our, systems, but I think there will be a bunch of patches that we have to execute, and that will be issue for us probably moving on. Yeah, how we can expedite the process for patching and all those things. Yeah.
You're already setting up and gearing up for those
we're trying
changes.
to figure out the way to do that at this moment. Yeah.
Artificial intelligence just changing the way the business works.
I guess there's 2 points here. One is improving your customer's experience dramatically, right? That's one point. The other point is you get efficiency, you streamline your processes, and you get efficiencies. So I think these are two things. The latter is apparent, actually. We're more trying to work on the improving our customer experience, actually. And I think there will be a lot of POCs that we have to execute for that part. The latter part it's not that you can streamline your process, put it in the air. That's not that difficult, probably.
Take a listen to what Jamie Dimon had to say about how they use AI.
Yeah.
I think we'll be hiring more AI people and probably less bankers in certain categories, and it'll make them more productive. So when you get up in the morning and you want to interview someone, it'll lay out what I've said in 14 different places. It'll give you questions. Your job will be the same. You'll just be much smarter at how you execute that job. So,
but I guess the question
but we will retrain and redeploy our people.
You're also doing kind of the same, right? 5,000 administrative jobs?
So we're saying that, there will be certain jobs that will be replaced by AI. That doesn't necessarily mean that we will lay off people. We will try to reskill them. I think and there are certain parts of our banking system where people can be utilized, actually. If, where you need dialogue with people, you need empathy with people, definitely we need people for that. So that, we can reskill them, I think.
JP Morgan is spending $2 billion annually on AI. How much are you spending?
Maybe probably somewhere around half of it from an investment and cost perspective. Yeah. $2 billion, right?
Yes, $2 billion. Yeah. When it comes to the use of artificial intelligence, we're seeing this divergence not only within the workforce, within countries, but among countries, right? And you're seeing the likes of India, for example, falling behind, stock market going down. You have expanded your investments and work and partnerships there. Is that going to affect sort of the way that you think about the world and where you expand?
No, I think so. I don't think so. I mean, still, we believe that India it will grow. It is a promising country, so we should be there. I think U.S. is also a big market for us, where we should be there. Europe is tough. But if we can be efficient, we can be successful in that. Asia definitely is a market for us, right? So I don't think the dynamics where we invest, where we put our business in, that doesn't change. But having said that, the way the focus might be a little bit different. Maybe we focus in U.S., India, and then maybe I went to Australia.
Oh yeah.
And I found Australia very interesting, actually. So we might put.
Why?
Number one, Japan, Australia. The relationship is very good, right? And I thought that Australia definitely is a country that we can deploy the capability that we built out in U.S. actually. So I think we will try to put people in there.
Ooh, so you're going to be expanding in Australia. What's the time frame?
No, we haven't said that yet. We're still considering that, But
when you say people, like how big the size are you imagining at this point?
I think right now we are somewhere around 200 or so, 200, maybe 50, or well, let's say maybe 300 or so.
Okay. When it comes to doing business in Japan, how much is the landscape changing? I know that you had to trim your stake in Orient Corp because of an activist fund. Is that the new normal in this country?
Well, so when you have investment, I think you have to think about whether you are the best firm to increase the the value of that company, right? And we decreased our stakes because we saw the other guy, Eiffel, which is coming, is better than us in building up the value for that company. So it's not really about actives. It's about how the value of the company can be improved. And we saw a joint venture with them is much better than for us doing it alone.
Masahiro Kihara, I really enjoyed this conversation. Do please join us again.
Yes, definitely.
He's the President and Group CEO of Mizuho Financial Group. And of course, if you want to re-listen to this conversation, all of the interviews, watch Bloomberg TV, documentaries, and so forth, do join us on this website, bloomberg.com/videos for everything that you might need. This is Bloomberg.
UBS holding its annual Asian Investment Conference in Hong Kong this week. The theme is investing in an age of change. For more on what's in store, let's get to the event. Our Chief North Asia correspondent, Steve Engel, is with us. And that's sort of understating the thematic right now in terms of how much change there is.
Right. It feels like my days these days, all over the place. We're going to tick all the boxes here at the UBS Asian Investment Conference. Obviously, the market volatility, the record high in the market, the bond rout, AI, China, the Middle East, new Fed chief. We're going to talk it all, and we have the best lineup of guests today and tomorrow to touch on all of that. Coming up in a matter of minutes to kick off our coverage here is Iqbal Khan. He's UBS Asia Pacific President, also the co-head of Global Wealth Management at UBS. Also, we're going to be talking to Wayne Dai, VeriSilicon Chairman, CEO, and President. He is leading this Chinese chip designer that recently filing for a Hong Kong IPO. Don't miss that on the AI boom in China. David Rubenstein, you know him. He has that popular Bloomberg chat show, if you will, but he's co-chairman, of course, co-founder of the Carlyle Group. Charles Evans is going to be joining us as well, former Chicago Fed president, and Dr. Simon Johnson, also later on this morning, co-Nobel laureate 2024 in economics. Busy day for us.
Our Chief North Asia correspondent, David Engel, there as we get you more throughout the course of the day. This is the setup as we head into the start of trading here in Asia at the top of the hour. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens, with investors looking through the renewed fighting between Iran and the United States. Haidi really focused very much on that AI demand, the infrastructure build-up. Semiconductors again led the gains overnight.
The breakneck momentum just continues in that AI and chip and tech-related rally, right? And you're right, it's sort of this sense of shrugging off the remaining, still a great deal of uncertainty between the US and Iran, and a huge gap to close when it comes to these very difficult issues, including around now wanting the frozen assets and the sanctions to be lifted, at least half of those assets to be lifted if a deal gets signed. There's going to be quite a lot of pushback within the Trump administration, so we haven't really made it that much further when it comes to these peace talks.
Yeah, Secretary Rubio still saying that there are a few days left in order to be able to finalize any deal with Iran. But still, we're seeing markets perhaps a little bit more sanguine when it comes to expectations around the AI narrative. Take a look at how Japan is opening. We had a day of pressure yesterday, but right now we're gaining more than 1% right off the bat. So do watch out for those tech names, anything related to semiconductor equipment, chemicals as well. Take a look at the Japanese yen at that 159 level, very close to that intervention zone that we've been watching for authorities to step in given the weakness. But when it comes to dollar-yen volatility, we have actually seen it fall towards a 2021 low or so. So signals perhaps of whether or not we can see some gradual strengthening on the Japanese currency. That will be key. Do keep an eye on JGBs today because we do have a 40-year auction as well. And this week, remember, we're very much focused on the new extra budget by Prime Minister Takaichi and the fact that she doesn't want to issue new bonds on a calendar year basis. So we are watching those macro moves together. And of course, when it comes to artificial intelligence, you have to look at South Korea. Take a look at how we're opening for the Kospi, because of course, it's also the debut of those leverage ETFs linked to Samsung, SK Hynix as well. And you can see the pop right there on Samsung, more than almost 8% at the open as we have the Kospi. Wait, is this being updated real time? There we go. Yes. So the Kospi is gaining 2.5% at the open, as we're seeing even a little bit of strength for the Korean won, which of course, Heidi, we know has been pretty pressured in recent months.
Take a look at what we're watching when it comes to treasuries and oil, and we are seeing that sort of catch-up trade for US treasuries as we see this commentary around optimism around the geopolitical situation, really pulling back some of the inflation concerns as well, even as we don't see that much progress when it comes to the reopening of the Strait of Hormuz. Watching oil, when it comes to Brent, we're down about 0.3%. Again, not a big magnitude of moves that we've been seeing lately when it comes to energy markets, but pretty steady as we continue to watch those developments in the Middle East. Here in Australia, we are seeing upside of about just 0.1%. Some of those materials and commodities names trading higher given the big move that we saw in aluminium overnight. Let's bring in Garfield Reynolds, who leads our Markets Live Asia coverage, and in Hong Kong, our markets reporter Anthony Stevens joins us as well. Anthony, let's start off with you. You know, Shery was just alluding to the relentlessness of this positivity when it comes to the tech rally.
Yeah, look, in Asian equities, micro has been the macro, right? And in Korea today, it's actually Micron that is the macro. A stock move of that size in the memory sector completely reprices the Asian tech story to the upside once again. So you're seeing, obviously, Samsung, you guys alluded to Hynix as well, up 8-9%, and there's Kioxia in Japan, and in China as well. We will have memory names quite strong. So that's just one aspect. We've seen this rotational rally in Asian tech over the last 4 days, right? So underneath the hood of 4 days of gains, you've had 4 successive kind of rounds of thematic plays in the AI trade. This is giving investors a lot of confidence on chasing future gains. As a result, equity volatility at index level is coming off, but dispersion under the hood keeps increasing. This is a very confident market where deep research and analysis of the tech team is being rewarded. And this is kind of a self-fulfilling kind of prophecy at the moment. China remains a little bit of an outlier as they struggle with kind of regulatory headwinds.
Anthony, as you were speaking and as we're seeing the pop in the open in South Korea, we're actually getting SK Hynix topping that $1 trillion of market cap, joining the very exclusive club the Samsung just joined a few weeks ago as well. I mean, this rally has been incredible, Anthony. Tell us a little bit more about what this means for the broader South Korean market going forward. And of course, all of the winners and perhaps even some of the losers in this divergence around the AI trade.
Yeah, look, it's an amazing moment of wealth creation for the South Koreans, right? They're picking the perfect day to launch leveraged ETFs. Perhaps, it is going to be a very whippy session as a result. It's so strong that it's starting to feed into BOK calculations as well. We have an excellent economics piece out from Bloomberg, analyzing the wage implications of all this money that's being generated at both Samsung and Hynix, and the pressure that's going to put on wages across the South Korean economy. So the winners in the AI trade, very, very much the Koreans and the Taiwanese. The losers are more on the software side of things, people who have to pay for this capex, right? And you're starting to see, this weight in the K-web, the China internet space, and India's tech ecosystem has also been struggling against this AI competition for coding. So it's driving a lot of equity dispersion in Asian equities. The winners are very clear, and now we're talking about triple-digit gains. Right? So Micron itself has almost tripled this year, and there are a lot of names in Taiwan and Korea that have posted very similar gains. This is a huge cushion for single stock pickers, right? Whatever macro thing happens, if you're sitting on 300% gains, you have a lot of room to run.
Mm-hmm. And Garfield, something that Anthony alluded to earlier, I mean, the wealth creation that we're seeing in South Korea in these sectors, right? Perhaps something that central banks will need to keep an eye on, given the potential of overheating in some markets?
Well, perhaps, although I think central banks have been much more focused on on something that stock pickers are completely not focused on, at least not since the beginning of April, which is the war and what that's done to the inflation outlooks. So perhaps at the margins, the severe gains that are taking off in equity markets may have some influence on your concerns about overheating, but I think mostly they're going to be looking at the inflation outlooks. And also in Korea's case, there is a strong case to look at things like there's been a big surge in Korean chip exports to the US. So you would certainly say that's a reinforcement for the potential that the Bank of Korea hikes rates sooner rather than later. I don't really think you could argue that there's a need to help the Korean economy. It seems to be doing just fine, whether or not you buy into the expectations for extraordinary profit growth that are breaking out in the tech sector.
It really helps that we're seeing fading volatility in FX, in bonds as well, right?
Yeah, that's definitely a plus, especially we're only about a week away from the bond sell-off sending long-dated yields high enough to at least momentarily disconcert equities. So signs that the bond market is becoming less anxious about where it's going, that's part of this backdrop that's encouraging investors to pile into equities despite an unprecedented energy supply shock thanks to the Gulf War.
Anthony, then what should we be expecting now as we look ahead towards the markets trading the rest of the week? And of course, these central bank decisions coming up as well. BOK, we're expecting to hear from BOJ Governor Ueda as well.
Yeah, this rotation theme will become much more important than the index level gains. I mean, it's a funny day to say that with the Kospi up 4, right? But as the market rotates around looking for AI bottlenecks, you're going to start to see this dispersion really grow. In the US, the dispersion index is at the year highs as well, and I'd figure in Asia we're going to see a very similar dynamic. The rates pressure will start to build. Rates are pretty resilient given what equities are doing, and the BOK will be a great case study in terms of watching the forward guidance on that front. We also have the BOJ. We're starting to see the street start talk about a BOJ hike sooner rather than later, and that may be why the yen is kind of locked where it is. So you will have these rate pressures, in the back end of this week and definitely coming into June. Another thing I'd really want to flag is the seasonality impact, right? We're heading into summer. Summer is a lull. We are sitting on really large year-to-date gains, with the incremental upside now limited to the gains from the US IPOs coming, the big ticket US AI IPOs, right? After that is complete, we probably have run our course in terms of incremental equity upside headlines. So people will have to start to be a lot more circumspect in risk managing these positions.
Right. We are now hearing from Governor Ueda at this point. I'll bring you the latest lines as we thank Anthony Stevens, the markets reporter, and Garfield Reynolds, who leads our Bloomberg MLive Asia coverage. And of course, it's really these comments from Governor Ueda coming from their BOJ conference saying that the oil price shock is a test of the entire inflation regime, that the world is facing the 5th oil price shock now, and that the shocks is never just about oil price shocks. It's really about the bigger macroeconomic picture that we continue to watch at a time when today we're also contending with a 40-year JGB auction. And of course, we have seen the government here of the Takaichi administration step in, trying to help the broader Japanese household with these inflationary pressures. We have more ahead on the Asia trade. This is Bloomberg.
The annual UBS Asia Investment Conference begins in Hong Kong today, bringing together top global business and economic leaders. Let's cross over to the event. Our Chief North Asia correspondent, Stephen Engel, is with our first guest. Steve.
Well, what better way to kick off the conference than the man who runs the show right here, Iqbal Khan, UBS Asia Pacific President, also Co-President of Global Wealth Management at UBS. Thanks for having us again here.
Good morning, Stephen. Thank you. Thank you for being here.
What is top of mind of the many people who have gathered here to talk about, obviously, a volatility in the markets, the bond route, there's opportunities in AI, there's China across the border. What's top of mind?
You know, we were just speaking, you and I, just before this session, that We spoke about 1.5 years ago in Shanghai at the GCC.
Yep.
And it feels different, right? You see the vibe, and we have more than 6,000 participants here at the AIC, Asia Investor Conference. It is the flagship One UBS event. We're very happy to have 400 companies here with a market cap of 10 trillion. Clearly, geopolitics, macro, AI, and everything else is on people's minds. But what is also interesting is that Asia is of interest. China is of interest. Japan is of interest. India, Australia. There's a lot going on in the world.
In China, I mean, I've just come back from 2 weeks there. Obviously, I see that vibe change as well. And Hong Kong market is back. The IPO, locomotive is pretty strong. But there's been also some regulatory changes. We've seen some crackdowns on outflows as some of the wealth that has been created in China. They like to see avenues of expansion abroad into Hong Kong, come take advantage of those IPOs and the like. How are you navigating those raft of new regulations, including sort of a crackdown on what I guess you could describe as unlicensed brokerages who have been getting money out for people illegally, according to authorities?
I think it's too early to say, but fundamentally, as you say, it's very focused on unregulated brokers. For us, we've been in this business for a long time, right? We've been in Asia for more than 60 years. We've been in mainland for more than 35 years. We're fully licensed. We have very strong policies, governance, and processes. We've been doing this for a very long time, and we know how to do this business. What is important to us very much is we focus on multi-generational wealth, globally as much as in Asia. And I think that's the big topic.
But how much do you need to step up compliance, or have been asked to step up compliance on the sources of this wealth? Obviously, that's the big concern, that authorities are seeing outflows. They don't want that. They don't want to see the pressure on the renminbi and the like. So have there been knocks on the door at UBS in Beijing saying you need to step up your compliance?
We run a very, very strong compliance process, as you know. So from our perspective, I think we've been running a very sustainable business. If you look at our results and also the inflows that you've seen in Asia just in Q1, they've been very strong. I think the momentum stays very strong, and from our perspective, we'll continue to work as we have in the focus of driving our business and supporting our clients.
How does it impact, though, when there is increased regulatory scrutiny? How does it impact the onboarding of new clients?
So look, I think one of the things that has become clear is that KYC AML is very important, has been very important for a very long time. And absolutely, onboardings have slowed down overall in the industry, and that's the focus. I think the opportunity that we're seeing now with technology and with AI is very much around simplifying, speeding up the processes, not cutting corners, but actually fundamentally improving the process, consistency of process. Just think about documenting source of wealth of an individual. It's a pretty complex task. But if AI can help you contextualize that and help you actually do that and ensure that there's consistency, you're going to fundamentally improve the process in addition to what you're doing today.
Nice segue, AI. It's in everyone's discussion book right now. Obviously, we just had Jamie Dimon of JP Morgan talking about that. We've heard some comments that he got a little bit of blowback. Bill Winters at Standard Chartered saying it's going to have a significant impact, obviously, on maybe some of the rank and files in the banking industry. How do you see AI over the next couple of years changing the way you hire and who you hire?
So let's step back, right? I mean, clearly there's a lot of focus on AI. We see high valuations around AI. There's a lot of talk around the value chain, everything from actual LLMs to data centers to the respective foundations, infrastructure. For us at UBS, we've been very focused on AI, specifically also led and driven by Sergio Ermotti, our group CEO. We've implemented, for example, Copilot across the board as just one example. And I have to tell you, in the last 6 months, I've been using it more myself, and I've been using it personally as well as professionally. And it's actually made me more efficient, more effective. And I think over time, everybody will become an AI native. It comes down to adoption and application, fundamentally. We look at this as something that will really enhance and increase capacity. What does that mean? As we become more productive, we can use that capacity to grow. We can use that capacity to serve our clients better. Imagine at UBS, when you come in through the door as a client, you get onboarded. And if you're eligible to getting a solution or a service from a compliance and regulatory perspective, it comes down to, is that valuable to you or not? And we will serve you. Now, all of that process is curated, semi-automated, manual, people-driven. You can AIfy that, if that's actually a word today, right? And
It
if
is
you
now.
do that, you can create a lot of capacity, and that capacity can be used to serve clients even better and grow.
What does it mean about top line job growth? Do you cut back to get more efficient? How does it work? And how do you communicate that?
Look, at the end of the day, as I said, I think it's more about productivity and capacity. Now, if we can use that capacity to serve our clients better, gain more share of wallet, grow faster, grow more, then the impact on costs and jobs is going to be less. Now, if we cannot, and this is an industry-wide topic, then of course it will have ramifications and implications on costs and jobs.
Jamie Dimon talked about he wants to hire perhaps more people who are AI experts than the traditional investment bankers. Does that make sense to you much?
Look, I'm not going to comment on what Jamie Dimon said, but fundamentally the way I'm looking at this, and I'm not an expert, right?
Yeah.
I really don't want to say I'm an AI expert, but fundamentally what I've been realizing is this is the biggest transformation we're going to see, and it's more about upskilling our people and us learning, but it's also about how are you going to use AI? How are you going to adopt AI? And more importantly, how do I become AI native? And you cannot do that if you don't use AI yourself.
Right.
I've actually started to build my own agents, and fundamentally an agent is nothing but multiple complex prompts, right? And I actually use those agents, and it made me more efficient and more productive. And if you can actually do that across a significant scale of franchise, imagine what that could do to your business.
I need to pivot.
Now, there are risks as well with AI, and we need to be very mindful of all the risks that come with AI.
Absolutely, and that's for perhaps later discussions as well, as we kind of see this totally being adopted. But I do need to pivot to the Middle East. You're having some job movements, obviously, there. Your wealth EMEA head is moving to the Gulf region. Also, your regional head is moving to, I believe, Doha. But the war, obviously, is at the backdrop. How are you seeing, because the Middle East is important for UBS, no doubt. Have you been seeing over the last 12 weeks of the war, shifts of wealth, shifts of funds to places like Singapore and Hong Kong?
We're a global franchise, right? Every region contributes more or less the same bottom line, specifically in wealth management, be that Asia, EMEA, Switzerland, or the Americas, which really makes us globally diversified. In that context, of course, the Middle East is important. Middle East has been an area of growth from a wealth management perspective, from a business perspective, from an investment perspective. Clearly, this war has created a setback, quite obviously, and it will really come down to when we see a peace deal and what that fundamentally then means economically. Having said that, we're pretty constructive on the Middle East. We believe that there's going to be opportunity in the Middle East from a mid to long-term perspective. We're not a short-term business. We're a long-term, as I said, multi-generational business. In that context, yes, we're moving Christine Novakovic, our head of wealth management EMEA, to UAE, Abu Dhabi. Yeah. And Neil Silkins, who ran Middle East, who was actually based out of UAE, Dubai, he's going to be moving to Doha, Qatar.
What are you hearing from clients, though, on the concern that there could be, and there is already going to get some readings of inflationary impact. We're going to get a reading tomorrow in the U.S. Obviously, the war is causing oil price shock, inflationary pressures. That's going to have an impact on borrowing costs in the Fed. I think the bets are almost even right now, either a cut or a hike. How do you read it?
So when we talked 1.5 years ago, we talked about diversification, right? Clients need to diversify and focus on high-value, all-weather investment portfolios. That's the key, and that's important. We continue that perspective. If you weren't going into last year or going into this year on a diversified basis, you missed out, and you potentially took some fat tail risks. From our perspective, that continues to be true. Be diversified, build a sustainable portfolio, an investment portfolio that is actually all-weather. Currently, clearly there's opportunity and continued opportunity in equities. There's an opportunity to lock in high yields and high income. Yes, there's a lot going on, macro as much as geopolitics. Having said all of that, fundamentally, there are also times where you can be hedging. And we've been actually clearly focused on helping our clients build better investment portfolios. That's what we really do. That's what we're here for, helping our clients navigate these markets and helping them invest better.
We talked about some of the challenges in wealth management. Obviously, sources of income is a big one. I might go granular here and talk about Singapore. I think MAS the Monetary Authority of Singapore is talking about maybe reducing the amount of time it takes to get clients on board as far as opening of new accounts. And I know relationship managers have been saying it takes far too long. Has that been a significant hindrance? And how are you working through those regulatory issues in Singapore?
It's interesting you mentioned Singapore and MAS because as part of this AIC week, Asia Investor Conference week, we started off in Singapore. We had the privilege of having Cha Durjan, Managing Director of MAS, speak, and he did speak about focus on onboarding times. Fundamentally, I think there's a clear realization amongst forward-looking regulators and forward-looking industry experts that yes, we need to have sound onboarding processes. We have to have sound KYC AML processes, but equally it has to be efficient and effective and has to be risk-based. And I actually applaud the focus of Cha Durjan and the MAS in Singapore to actually look at how can you improve onboarding. It's also about client experience, onboarding experience, as much as it is about what is a sound process. And I think technology today, and I don't want to belabor the AI point once again, but fundamentally it should help us achieve some of these things.
All right, Iqbal Khan, thanks so much for your time
Stephen,
on Bloomberg Television.
So
and obviously seeing further integration with Credit Suisse and the opening and the moving in of clients, or no, of employees to your new headquarters over in Kowloon side, I believe in the fourth quarter.
That is correct.
All right, thanks so much. Iqbal Khan, the main man here in Asia. Going to send it back to you. We have lots more coming from the Asian Investment Conference here in Hong Kong.
Yeah, Stephen Engel there joining us from the conference. In fact, we will be speaking to the Chinese chipmaker VeriSilicon. The CEO joining us in a few minutes to discuss the company's strategy and the broader outlook for the sector. This is Bloomberg.
Well, the AI-propelled tech rally continues unabated. Take a look at some of these gains that we're seeing in the Korean session. Samsung putting on another 5%. We're seeing SK Hynix, one of the latest members of the $1 trillion club, surging past that market valuation after its shares have gained more than 900% over the past year. That strong investor confidence in Hynix's position as the leading supplier of advanced memory chips powering the AI story. We're also seeing that impact of Micron also joining that $1 trillion club as well after rallying almost 20% in the Tuesday session.
SK Hynix, the third Asian company to join that $1 trillion club, following Samsung, which joined it just a few weeks earlier. Anything in the chip universe rallying. Tokyo Electron, the equipment maker here in Japan, another record high. This is Bloomberg. Record highs for the Japanese and Korean stock markets right now, especially with the tech sector and the rally that we saw on Wall Street. Semiconductors led those gains. So you're seeing the chip universe in Japan led by Tokyo Electron, which has gained more than 50% already year to date, seeing record highs. When it comes to the Kospi, look at that go past that 8,000 level. The likes of SK Hynix now joining the $1 trillion club, only the third Asian company to do so after TSMC, after Samsung Electronics earlier this month. And we're now seeing, of course, the gains across the board when it comes to Korean equities as well. Let's get back to the UBS Asian Investment Conference in Hong Kong, where Stephen Engel is with our next guest. Steve.
Yeah, we're going to pivot to talk about tech a little bit deeper with Wayne Dai, VeriSilicon Chairman, CEO, President, and founder of this Chinese chip designer. I mean, it's been a great run for Chinese chip designers as there's been a lot of state support for indigenous innovation and getting your own chips as opposed to having to import the most expensive and most advanced accelerators for the AI world from the likes of NVIDIA. Are you concerned, though, by the valuations? I mean, some of the valuations of these chip companies are quite high right now, including yours.
Yeah. So there's an important day, September 24, 2024. That day, China government certainly have many policies try to help the stock market because they cannot have housing. There's a bubble. You give the increased little salary, they still put in the bank. In order to have internal demand spending, they think maybe the only way to make the stock market more healthy.
Yeah.
Since that day, less than 2 years, our stock increased 10x. 10. Right? As a high-tech company, right? It's not easy. Now let me explain to you why is that. Okay? Why 10x? Is this too much or you have another growth? I need to explain this. You just say may have too much. I can tell you, Broadcom stock, right, increased 4 times, revenue 4 times, Marvell maybe revenue 2 times, right? What they do? For the AI, there's 2 kinds. One is general purpose, like GPU, NVIDIA, right? Doing very well. However, not everything is general purpose. You want special purpose.
Yeah.
ASIC, like Google TP, right? Now, more and more, the other part getting more, maybe more than 50%, reaching the market share. Special move to edge, right? They call AI ASIC.
Yeah.
So who's helping those TPU, Google, Meta, Broadcom, right? So that's how, now in China, also have both sides, GPU, but we have many GPU, not one. Hong Kong, couple, IPO, Shanghai, couple, they're quite high variation. And there's many GPU on waiting to be IPO. So in Broadcom didn't, because NVIDIA, whatever doing is nothing did the Broadcom help.
Right.
In China case, almost every GPU company is our customers.
Right.
Maybe we give them IPs or doing some design. Our models, we never branding service. Either give you IP or doing the chip design, but it's your chip. But on the other hand, there's other side, special purpose. We call cloud service provider. Used to be internet company, right? So those people, also our customers, called AI ASIC.
The agentic.
Agentic.
The agentic AI, like open claw kind of services, right?
So the chip doing, I would say the chip has 2 kinds. One's general purpose.
Yeah.
Like NVIDIA.
Yeah.
China has many.
Yeah.
No, sorry. The NVIDIA, right? The general purpose.
Yeah.
China has many general purpose GPUs, right? But this part, but other part, AI ASIC part, like what the Broadcom have, like the Google TPU type, we also have that type of cloud service provider. We also service their part.
So the opportunities are great. What is that going to mean for profitability? Because I talked about valuations earlier. I think you, according to Bloomberg data, you have an estimated price to earnings ratio over 12 months of 318 times. You were not profitable in the first quarter. Net loss of 340.8 million renminbi, but revenue was up 114%. So how are you going to turn that to profitability before you list here in Hong Kong?
Yeah, I can tell you this. End of last year, we have a called backlog, right? The service is backlog, $715 million backlog. This year, January 1st to April 29th, the first 4 months, new booking, 1.1 billion.
Wow.
So you know what's a booking? If I have design win, then you know exactly how to look at revenue. If you place order, I know when exactly. So mostly 80-90% will be converted to revenue within 1 year. So this kind of indication. So the thing is, as a platform company, key thing is the scale. Platform is not a one big deal. We have 100 chips in production, right? So IP, we have 460 customers. Chip, we have accumulated 350 customers. So scale is important. When you reach to scale, right, non-profit become profit. If you not grow, you be profit in non-profit. So sometimes reach to a scale is very important. So now we are in the turning point for that.
So you're in a turning point. So how much do the Chinese large language models and also the agentic AI suppliers, how much do they need the most advanced chips from the likes of NVIDIA? As the indigenous chip making, like you, I mean, also we saw Huawei unveil the logic folding technology, this tau scaling law, essentially replacing Moore's law to get more speed across the chipset than smaller size.
Okay, I answered the 2 questions.
Two questions.
So first of all, like I said, when you go to the edge, it's more ASIC rather than general purpose. Right? You guys see the trend. like Google GPU right now getting more market share than NVIDIA. Even total is still big, right? You see, China same move. So I say, I different from Broadcom. I serve both sides. Broadcom only serve the NVIDIA side, right? We serve both sides, and we grow. And the age is very important. The age. Okay, I let get back to you. So this trend, actually, I use say a tree. The root is computing power. The trunk is training. Is big model. Yeah. But you cannot have a leaf from trunk. Then you have a branch. It's fine tuning. Medical, just vertical model, right? Vertical small model or something. The fine tuning, the financial, right, whatever things, right? Education. So this is called branch, fine tuning. Then you grow the leaf, inference. Right. So 2 years ago we say everyone talk about bigger model, building bigger data center, training. I think fine tuning and the inferencing eventually will exceed. Eventually, after we build many cloud training. So this is the trend right now. We see that, and you make money on the edge. If you don't like without cell phone, we cannot have internet coverage, right? Yeah. Money is this device. So the edge is very important. Okay. First I made the point. Yeah. Now edge, the AR phone, AR PC, but I'm talking about AR glass. Yeah. Air glass. See, people 4 years ago we did the ASIC for Google. Yeah. Air glass, very optimized, right? Right now is one big, one small. If you know air glass, yes. One from big is from cell phone change a little bit. Very powerful, but power is the problem. You cannot turn on all the time. Right. And then from the watch, like the low end, it's very low power, but not enough. They put one big, one small. Obviously not optimal. But no one willing to make one chip because they don't know how many pairs you sell. But now is the point. They call ASIC, custom. Yes. The thing we did 4 years ago, I think right now people knows which glass can sell at least 500 million pairs. Once you know that, they're willing to pay NRE. Like we do service, you need someone to pay to that. Now is the time. So this edge device is very important. But you realize the reason Google announced some AR glass, no display.
Yeah, but again, I guess back to my point is like some of the innovations in the chip design by the likes of Huawei and others, like the logic folding technology. How much of a game changer is that potentially for the evolution of China's indigenous chip design? And I do need to, before we wrap up, I do need to ask you about the IPO here in Hong Kong.
So I think this, yes, shrink device is one wrong. There's another way. You not necessarily just do your biggest chip as you can, right? Shrink. You make it 3D, 2D.
You fold it and stack it.
2D. Then 3D also have power, the heat dissipation. Yeah. It's not for free, right? If you stack them together, heat dissipation also gone. But that's the way. So used to call system in on chip, later called system in package. Then you open your multiple piece. Like covers, whatever. So you need to do 2.5D stacking, 3D. This is called system in package. Yeah. As long in package, you don't care how inside they do it. 3D stack or 2.5D. So that's one. So, but I think we need to point out, you need to make sure the power dissipation is not for free. Dissipation. Because you stack together. Especially if each layer is not most advanced process, power dissipation also is.
Wayne, we're running out of time, but I need to ask you about the Hong Kong IPO plans. Some reports about upwards of $1 billion you're going to raise here in Hong Kong. When do you hope to list? There's some pressures in the market, bubble concerns. When and how much are you going to raise? Yeah. So the thing is, right now we're up to 10%, like 1 billion. Not necessarily. Hong Kong, you put up limit. Right? The Hong Kong nice thing, you can always refinance it. You don't need it one time. But I think that the bubble that I explained to you, if compare current to the market we address, right? I think we just started China. I don't think China has that much of a bubble compared with other places. So the advantage clearly is more international. By the way, our 35% revenue from outside China today, 98% engineering in China. Gotcha. So for me, it's less export control power. So the thing is, they definitely provide more international market, right? So we already 35% overseas revenue.
Most from US.
Wayne Dai, Thanks so much for your time on Bloomberg Television.
Thank you.
We could talk forever on this. All right, Heidi, going to send it back to you. So much more from the Asian Investment Conference of UBS.
Another great conversation with our Stephen Angle there in Hong Kong. We have more exclusive coming up from the UBS Asian Investment Conference. Carlyle's David Rubenstein joining us, along with the former Chicago Fed President Charles Evans and Nobel Economics Laureate Simon Johnson. You can catch those conversations at the times on your screen. More ahead on the Asia Trade. This is Bloomberg. China's foreign minister has used a United Nations speech to take a thinly veiled jab at the US war on Iran. Let's get more when it comes to Wang Yi's address with our China economy and government reporter, Nectar Gunn. So what happened at the UN? What did we hear from Wang Yi that perhaps we haven't heard from before?
Right. So China's Foreign Minister Wang Yi made a lot of thinly veiled swipes at the U.S. And just to note that Beijing seldomly directly mention the U.S. in its criticism in such occasions. But if you look at the speech carefully, you will find a lot of phrases and lines that took aim at U.S. policies and actions. So, for example, Wang Yi said that any unilateral military action that bypassed the UN Security Council is unacceptable. So that's in line with China's long-held position on the U.S.-Israeli war on Iran, where Beijing deems this war as, it should never have happened. But it's also kind of important to know that China have never used the same criticism against, for example, Russia's invasion of Ukraine. On economic and trade issues, Wang Yi lashed out at U.S. again, explicitly unilateral sanctions against third countries that bypass the UN framework, and protectionism, and any efforts to decouple supply chains. And most importantly, Wang Yi also took aim at U.S. efforts to withhold significant funding from the UN, which has caused a financial crisis at the agency. It has also took aim at U.S. efforts to withdraw from dozens of UN agencies and to establish alternative bodies like, the Board of Peace, which Trump has one time suggested that might in the future replace the UN. So there is a lot of veiled criticism, but I think the underlying message here is really to juxtapose China with the U.S. and to present China as a defender of the global system and a stabilizing force.
I mean, Beijing has used the global stage in different events to try to portray that for itself, right? Trying to really challenge the international order being led by the U.S. right now. That these comments sort of reflect that, especially when it comes to the UN's role and the U.S.?
Yes, exactly. This is what China has been saying for a long time, especially at on the international stage. What China is trying to do here is really present itself as a defender of the existing rule-based multipolar system that it accuses the U.S. of disrupting, right? But China's message is clear here. It's not trying to establish a completely alternative system from scratch. What it wants to do is to see the United Nations being reformed and become, quote unquote, more just and equitable, and that in Beijing's eyes means to give the global South countries more voices and more say in governing global affairs.
What else can we expect from this trip?
Right, so Wang Yi is actually scheduled to visit Canada after his trip to the U.S. We know that Canadian leader Mark Carney visited China earlier this year. So Wang Yi is going to visit the country as Beijing and Canada are warming their ties. But I think what's important to watch while he's still in New York is whether he's going to meet with any U.S. officials. Because the last time Wang Yi was in the U.S. in New York, that was in February 2025, last year, a month into the second Trump administration, and that time he didn't get to meet with any U.S. officials. But this time, obviously, it's very different, right? Because U.S. President Donald Trump just had a summit with Xi Jinping in Beijing, and the two countries are trying to stabilize their relations. And importantly, they need to lay the groundwork for President Xi Jinping's visit to the United States in September. So that's only about 4 months away. They have a lot of discussions and groundwork to do.
Bloomberg China economy and government reporter Nectar Gunn there joining us from Hong Kong. Let's turn to U.S. politics. Polls have closed in Texas in the primary election runoff to decide which Republican will join November's race for the U.S. Senate. President Trump has endorsed State Attorney General Ken Paxton over incumbent Senator John Cornyn. Let's go to Dallas and bring in our Texas Bureau Chief, Julie Fine. Julie, I mean, that endorsement by President Trump last week dramatically reshaped this race. Why is this election so important?
Well, this election really is important because of the balance of power in the Senate. Ken Paxton, who is leading in the polls as we speak, the polls closed just a little while ago, is seen as more beatable by Democrats. Now, Democrats have not held a statewide office in the state of Texas since the early 90s, so you're looking at a couple of decades here. But Democrats feel this may be their best chance to win that seat back. Republicans now expect to have to spend a lot more money to defend the seat if Ken Paxton is the nominee.
You talked about the spending, right? We saw an enormous amount of spending in Kentucky in the primary there, and this is sort of being reflected. Is this part of a broader trend?
Well, I mean, if you look at what's happening in the Senate now, there are real concerns that Republicans could lose both the House and the Senate. Of course, the House has been discussed more, but now there are questions about the Senate as well. I would expect to see more than $100 million spent here in the state of Texas in the general election. It will again depend on who the candidate is, but you have to look at the fact that the Democrat, James Tallarico, has had just a few months by himself, essentially, to raise money for the general election, while the Republicans have been going at each other in the primary runoff.
How much are the midterm elections in November now being shaped by the cost of living crisis that the U.S. is facing, especially with the ongoing war in Iran?
I mean, this is certainly something that is on voters' mind, as is affordability. But again, when you look at this specific race here in the state of Texas, you see the president weighing in. You see a lot of the actions that we've seen in terms of James Tallarico really raising money as this goes along and talking about things like affordability, like gas prices, like gas taxes. You're going to see that play out even further in the general election.
Bloomberg Texas Bureau Chief Julie Fine there. The latest, more ahead here on the Asia Trade. This is Bloomberg. The top corporate stories that we're tracking this hour: in Xiaomi's first quarter profit fell more than expected as a sharp rise in memory costs weighed on its smartphone business. Net income tumbled 57%, while revenue dropped for the first time in nearly 3 years, down 11%. Xiaomi's president says the company plans to improve its product lineup and raise average selling prices to offset weaker volumes. Volvo has confirmed to Bloomberg Scoop that it's reached a deal with the Trump administration to avoid a U.S. ban on vehicles tied to China. Volvo is majority owned by Zhejiang Geely Group. The agreement overcomes a barrier that's effectively blocked the U.S. market from Chinese cars over national and economic security concerns. Bloomberg has learned that China is restricting overseas travel for top AI professionals at private firms, including Alibaba and DeepSeek. Sources say some individuals now need approval from relevant authorities before headed out of the country. The move highlights how AI talent is now seen as a strategic asset, but risks undermining the ability of AI firms in China to recruit and retain talent.
And take a look at how Japanese banks are trading at the moment, underperforming the broader market as we have the Nikkei at the highest levels on record again. But of course, this after an immense gain by financial institutions in Japan, rising Japanese rates boosting loan profitability. But of course, it's really about what the Bank of Japan will do next. And we have now heard from Governor Ueda this morning saying that the oil price shocks are a test of the entire inflation regime, that oil price shocks are not just about oil price shocks, but they could have various other effects, second-round effects that they're watching very closely. We'll continue to watch the JGB space, of course, because we do have a 40-year auction here in Japan as well. But when it comes to the markets today, Haidi, it's really that parabolic rise when it comes to the tech sector, right? I mean, we're talking about Japan, we're talking about anything in the chip universe. But South Korea, wow, SK Hynix just joining that $1 trillion club, just another Asian Asian company joining this very, very elite exclusive club after Samsung joined it earlier this month. What are we talking about? 900% gains on SK Hynix or so in this year?
It feels like we're struggling to keep up with the latest members of that $1 trillion club now, right? Just in the last sort of 12 to 24 hours alone, we've had a couple more. And you can expect that exuberance, Shery, to flow through to the greater China markets as we get mainland China, Hong Kong, as well as Taiwan coming online. This is the picture that we're sort of coming off from. A little bit of softness when it comes to Hong Kong tech futures there at the moment, but TAIEX futures, we'll see a pop there. This is Taiwan's market cap. It's climbed to just under $5 trillion, surpassing that $4.92 trillion for India to take its spot as the world's 5th largest stock market. That, of course, has been driven mainly by the rally in one company, one stock alone. That's TSMC, of course, the 5th largest in the world, but TSMC accounts for about 42% of that benchmark index. When it comes to the China markets, we will be watching the likes of Alibaba, of course, in light of this reporting that we've had around the travel restrictions around AI talent for companies like Alibaba and DeepSeek as well. That is it for the Asia trade. Our markets coverage is ongoing with the start of trading in China.